Learned about a loan last night that I really didn't know about. And I've been selling real estate for 10 years, and it's actually one geared towards investors and can be used for really short term rentals. And it's called the DSTR loan. And, on Clubhouse this morning, I brought it up, and, that turned into a conversation of, how to educate a client on shopping a lender, right? And what's the best way to go about it, and how to protect them and their inquiries on their credit reports. And, because that's what people are mostly worried about is, how's this going to show up on my credit report? And there's a lot of misinformation out there. And a lot of it's based off of, just other things that going on in our life, right? When we go and open a new credit card, hard pull, right? When we go car shopping, every single car that they want to pre-approve us for, hard pull, right? And it's just different with real estate, and it's different with shopping for a mortgage. And as a real estate agent, as an expert advisor, I'd really hope that you guys get to the point when you're doing your buyer's consultations, you have your preferred partners, right? Your preferred lenders. I always encourage my buyers to go out and shop, right? Go and get 2, 3, 4 different opinions, right? Go see who's doing, the loans and what you can get as far as, interest rates and what you can get as far as closing costs go. And what I tell clients is, if you are going to go and shop and you're going to go get a different opinion, make sure you go and you ask for the closing disclosure. And that's going to be the one thing that's going to show you an apples to apples comparison from one lender to the next. And in that closing disclosure, it's going to break down all of the fees associated with it, right? It's going to show you, all of the closing cost fees for doing the loan with that lender, estimated title expenses, and some of that stuff's going to be off and it's going to change, but estimated title expenses, your interest rate, all of those things. Because a lot of people shop interest rate only, but they don't understand that some lenders show a lower rate but charge you points in order to have it, so your closing costs are a little bit higher. Every lender is different as far as what they can charge a consumer to do the loan, right? One lender may be $1,000 flat fee. Another lender may have a sliding scale based on loan amount. And most of the time, a lender will always match interest rate if you actually show them the good faith estimate from the previous lender that had a lower rate. And rates are typically set by the market, your credit score, right? So they should be fairly similar from one lender to the next. They may vary slightly, but there shouldn't be a huge difference. So if you are thinking about buying a house, I encourage you to go and get 2, 3, 4 different opinions, right? Make sure you get it within the first 2 weeks time frame. I know there's a 30-day grace period, but I always tell clients, do it within the first 2 weeks. If you're going to shop, go and shop and get it done and over with. Right? There's always various factors, right? You're going to shop right now, rate's going to change. You may, charge your credit scores. So now your credit score, or charge your credit cards. So now your credit scores may go down. There's various factors that go into it. But if you're going to shop to see who's going to be the best lender for you, who's going to offer you the best loan for you and the best terms for you, make sure you do it in that first 2-week process just to be safe. Pick your lender and then go with them.